So for the fintech community in Boston, Mike hardly needs an introduction. But I am going to ask you to talk about your origin story, Mike, because it's awfully interesting. You weren't the founder of Flywire. You started out in business development, and when you were still in your 30s, became the CEO. Yeah. So can you talk about that?
Yeah. Well, I guess I should maybe start first. My tech career started out, it was part of, fortunately, 2 other tech companies prior to being part of Flywire. And I often say I was going to be a miserable management consultant, but thankfully I went to visit a buddy at a startup, got hooked on just startup culture, and was fortunate to be part of multiple startups that were successful. So had done pretty much everything in those startups, from implementation of software to pre-sales engineer to sales to business development, even ran product for a bit for one of the companies. So that kind of experience, I didn't realize at the time, but that kind of led me to having so many different parts of a company that I had been exposed to in the tech world. And so when I came into Flywire, it was originally called Peer Transfer, again, headquartered here in Boston. It was early. It was shockingly early. The second startup I was part of had just been acquired, and I was looking to do another early stage company. I often say I didn't realize how early it was. I had 4 kids under 7 with my wife, so that's a good example of didn't realize it was that early. And about a year into the journey, they'd raised about $6-7 million, Series A and a seed round. And we had started to get product market fit. But I'll often tell people the business did not perform as the spreadsheet told it to perform. And so you had this vision of revenue and growth and trajectory, and the business is going to do what the business is going to do, and we had to adapt to it. And so actually took over, asked to take over as CEO, correlated to the Series B round of capital, but the company almost didn't make it. We almost sold it for $25 million. We debated whether we had to shut it down at one point. So it was never kind of a start to finish runaway success. I took over at about 30 people, $300K of revenue, with a $4.5 million burn rate. So that doesn't sound like the best CEO job in the world. That's what it was at the time, but it's been an amazing 11, 12 years.
Wow. So congratulations, you're CEO of this Series B stage company with a big burn rate.
Tag, you're it.
And it also is only in the education tuition payment space.
Yeah.
Now you've significantly diversified the company. Can you talk about the businesses that Flywire is in today and how you thought about diversifying well beyond tuition payments?
Yeah. So back then we had built our first product, and we were launching that product in one geography, right? So it was one product, one industry, one geography. It was a cross-border tuition product. So we were helping U.S. universities collect money from students all over the world. And when we were kind of in that near-death experience, in that kind of Series A, Series B time, we just doubled down on, we have to, before our roadmap of all the other great things we can do, we can set out to accomplish those, we actually have to be great at one thing. And so we kind of doubled down first on this core product and said, we've got to get hundreds of clients, hundreds of universities in the United States using this product for us to have a chance at getting to any of the other ideas we have on the roadmap. And that was a big moment. That was kind of that turning point moment. I think as an early stage company, you always get distracted, and especially, times like this are very similar to when it was when we were going through this time. There were companies being funded all the time. They seemed so successful. They were raising huge amounts of capital at crazy valuations. And there was always this temptation to kind of go and spend a little bit of time and effort on the next thing and on a different product, a different geography, maybe something that could go faster, grow faster. And we had that distraction challenge early on. And so we were very focused on staying core to the initial mission, getting to the point where we had a real initial business, and then using that as a launch point to differentiate. And so, if you think of near death at 2013 Series B, it was Q1 of 2015 where we raised our next round of capital, which was our growth round, and we were on an $11 million run rate. So, in probably 18 months, we went from a couple $100,000 of revenue, burning $5 million a year, to $11 million run rate in revenue, couple of months of profitability. And so it was quite a big shift. And it was that growth moment where we decided to say, okay, now's the time. We've got one core product, it's working, it's a 10 plus million revenue product. What are our growth ideas? What are we going to do to take this thing to 100 million? That was kind of our next way marker in our minds at the time on revenue. How do we build a company with 100 million in revenue? And there were really three things that led our kind of global diversification and expansion. It was see if we could go outside of the United States. So would there be universities all around the world that could use our product? And so that was a geographic expansion challenge, which was not easy in itself. We had hundreds of clients in the United States, but we only had one product. And so my head of sales, Sharon, would always come to me and say, I can't upsell them anything. I only have one product. So we needed a second product offering that we could take to our existing customers and try and drive additional growth. And then we knew this combination of software and payment assets that we had was a unique asset, and we thought there are other industries that would benefit from that. We process very large, complex payments, and there weren't a lot of providers doing that in traditional payment processing. And so we knew we could go to other industries. And so those three things were kind of why we raised that growth capital. And I'll often say I expected one of those three strategies to work. I didn't expect all three. And so if you kind of fast forward now, you've got clients in 50 countries, you have multiple products in the product suite, and we're across 4 very large and growing verticals. And so it's a very diversified business, and that's how we kind of got there.
And as you think out 5, 10 years from now, what do you expect the mix of those businesses to be?
Yeah, I mean, it's our education business has so much room yet to go. And so it's always hard to catch up to it because it's large and it's still growing quite rapidly. Part of that is a global expansion. Part of that's the additional products. But I think you can see just in the 4 years of being public, the business has significantly diversified, right? Our travel business is north of 100 million in itself. We have a business payments division and a healthcare division, both of which are growing quite well. And so I think you can expect us to continue that diversification. I think there's even potential additional industries or verticals or sub-industries that you're going to start seeing Flywire go into. And so I think wherever there's large, complex payments, traditional payment processors have kind of neglected those because they're harder, especially when it comes to movements cross-border. And Flywire's got the core software and the payment infrastructure to really address those needs. And I think there's a lot of them.
You've also diversified beyond payments. So even within, for example, tuition payments, you're not just processing the payments. Can you talk about that?
Sure. Yeah, so one thing as we added additional products was to look for what are the workflows or the processes at our clients that are poorly digitized, right? And so we often say, if you think of Flywire, we're digitizing large, complex payments in industries that are kind of been left behind, right? If you think of your experience at a retail location or your experience at e-commerce, right? You're probably buying way too much stuff, right? If your house is anything like mine, boxes are showing up all the time, right? If you're tapping and paying, if you go into retail now, that was not how it was 2 decades ago in those two experiences. And so that's all been digitized and modernized. And when you are in our industries, our sectors, those experiences still feel like you're using the internet many times like 10 or 20 years ago. And so if you've ever made a tuition bill, if you've ever made some type of healthcare payment, if you've ever tried to send an international bank wire, those are all good examples where you're like, this can't be the latest technology. And so that's for us what we're really focused on is how to do that. And so when you think of our education business, for instance, we added a whole suite of products outside of payment processing, but that attack very critical issues that our university clients see. And I'll give you a couple examples. One is in relation to 529s. So, there's a huge push to save for kids' education and to use these kind of saving vehicles, but no one's ever connected those vehicles to the actual universities to distribute those payments in an automated way. And so we actually built a product that could be offered to the brokerage firms and to the universities that would actually connect them and effectively distribute those digitized. What was happening before Flywire is you were seeing FedEx envelopes literally leave the brokerage firms and they would show up all over campus, and the finance team would just wait and collect them all and then open them up and start manually processing the checks. And so it's a great example where software and kind of our API infrastructure was able to be extended and solve a real pain point, but it wasn't really the actual transaction that was the issue. It was actually the workflow and the process. And so we continue to look for areas of software to deliver more software for our clients, whether it's cross-border invoicing, which is complex, right? You're invoicing in one currency, someone wants to pay in another currency, whether it's a certain type of document capture that may happen on in an education or in a travel experience. Those are things that are centered around the financial transaction, but that are very poorly managed by our clients. And we think we can add value by adding software and capabilities around that.
You've also been an active acquirer of businesses. Can you talk about why you've bought versus built and how you think about?
Yeah, it's a tricky one. We've had a pretty good history of doing acquisitions, and I would say it comes even back to when we were a private company. Probably acquired 7 companies ranging in size from, acqui-hires that are sub $1 million to, we just announced in Q1 of this year, a $330 million acquisition. And so we've done, a number of different acquisitions along the way across industries, across countries. And they usually fit into one of 3 buckets for us. So it's either something that we think can accelerate an existing industry or capability that we already have, or it's something that we could potentially use to upsell our existing clients, something that our clients want us to do, and it becomes do we build this or do we acquire that capability? And then the third opportunity is is it something that we aren't in yet? Could be an industry, could be a geography, could be a component of our payment network that we haven't gotten around to yet, and we could actually expand into that area through acquisition. And we spent most of our time in the first 2 areas. And I would say our business decision comes down a lot to embedded client base. And so when you think of our business, part of the reason it is it's such a great business is because we have this embedded software sitting in our clients' critical workflows. And so, we're sitting between their billing system, we're helping them get paid, right? So it's a much more valuable place to traditionally be. I'll often joke with people, I don't know a CFO that gets a bonus for paying bills faster, but I know a lot of CFOs that care about getting paid faster, right? And so our software is sitting in a critical spot of our client's workflow. And so we like businesses that are sitting in that critical spot on accounts receivable side of a transaction. And so we found a number of acquisitions where even if we were to replicate functionality, to get that functionality penetrated and to drive that go-to-market engine to win those clients over would probably take years, maybe even a decade, right? And you wouldn't have runaway success. And so that's a good example where if we see someone with really great client relationships, maybe they were a bootstrapped tech company and they didn't get the resources we had to invest. We raised $200+ million in venture capital. And so we see a lot of parallel companies who were just bootstrapped and they couldn't get past the $5 or $10 or $15 million revenue number because they didn't have the resources like we did to invest. And so those are great candidates where those teams can come inside Flywire. We can invest behind those teams. We can add different capabilities. We can take that product global. And those are the areas that we often look at is when you find that embedded loyal customer base and somebody that is in need of more innovation or capital that we have access to, those are usually the best combos for us.
Have there been any surprises in the integration of these acquisitions?
Oh, I mean, I don't know if we have enough time to go through all the issues and challenges and mistakes, but I'll often say like any kind of issues or mistakes, like I make mistakes every single day, as my wife will tell everybody. So I look at this and say like you have to learn, you have to grow, you have to adapt. And I would say some of the big learnings were just that oftentimes the teams that you see. What you see from the outside and what you actually see post-acquisition can be very different. Meaning, sometimes, when you're acquiring a business, you can look and it can seem like it's being driven by, 5 critical individuals in this area of the company. And then you get inside and you actually realize that there's actually 10 more critical individuals that you never even got to meet in diligence that are over here. And so it really comes down to understanding the clients, meeting the clients. Who do the customers name, right? When they say, oh, this person's really great. Who do the customers think is great inside that company? And you just have to make sure you're really adapting your integration strategy behind some of that. I would say the other big lesson is just technology investment. So sometimes when you're dealing with dated technology, you can convince yourselves to let it ride because you don't want to disrupt too much. And I think we've developed a much better approach over time to be a bit more aggressive, right? To be direct with customers and say, hey, we're going to invest here because this is what we heard you wanted us to do. And so that means there may be some migration. There may be a little change coming. And if you're transparent with the customers about it, if you're transparent with the team about it, it goes way better than just kind of crossing your fingers and hoping everything goes well. And while building different tech and having the conversation later. And so really baking those into the integration plan and being transparent with customers is kind of top of mind.
What's the main thing you've changed when you make acquisitions now that you didn't do in the early acquisitions that you made?
I would say we're better at determining org structure for sure. Early on, especially when we weren't a public company and we were a private company acquiring other private companies, you had a lot of people who, somebody like myself or my president was leading the acquisition. The expectation was that they would report to you, right? Like, you're a private company, we're a private company. Sometimes we weren't even that different in size. And we kind of fell for that a couple of times, right? And we kind of didn't keep our org structured in the way that was the best way for us. And so I would say now we're much better at those conversations right up front, right? Of yes, I'm available, I'm here, but I'm running a public company, and yes, your business is super important. It's going to be, there's going to be weekly meetings, there's going to be quarterly meetings, but we're not going to change our default org structure. We're not going to change our default incentive structures. And so just being more transparent with people about some of those and clarity has been a huge, huge lesson.
I'm sure you've looked back and said, thank God we diversified with everything that's going on from a policy perspective. So let's dig into some of those macro trends. And why don't we start with your original business of tuition payments? Obviously, there have been some very major changes to the student visa landscape.
Really? I haven't heard.
Can you talk about the macro and tuition payments?
Yeah. So we're as I mentioned, our first product was helping international students pay for tuition, and as you can imagine, you've all seen headlines, all types of questions around student visas and issuance in the United States. And for those unaware, those same issues have been happening in the UK, in Canada, in Australia, and they've been happening over the last 18 or so months, right? All the countries kind of are evaluating immigration policies, post-study work permits, student visas, and deciding if they have the right distribution of those visas, the right number, and the rules around them. And so it's been a very dynamic time for our business. And it's one of the things that, we've been through a number of kind of resilient testing times, right? We were that early time I mentioned where, our business wasn't kind of at that revenue level. We needed it to be given our burn rate. We went through COVID, we entered COVID running a education, travel, healthcare payments business. So that wasn't great, right? So we navigated that and we came out the other end of that. And so we've had multiple instances where we could prove our business is resilient and diversified. And so for us, a couple things really do jump to mind. One, we went global, right? We have education clients in 50 plus countries. And so when you think about all what's going on around immigration, I think it really comes down to this bigger question, which is the desire to kind of seek that next level of education? Is there a massive change in that, right? And if you look back over the last 20, 30 years, and all this is published public data, the number of international students have grown. The people studying outside their home country have grown roughly 4 to 6% a year on average. You normalize, hold COVID out, right? Hold some of the last 12 months out. But that's the kind of 3-decade trend that you've seen. Now, where they've come from and where they go to, varies greatly, right? There are times where China was not even in the top 5 or top 10 origination countries, and then it was in the number 1 spot. And now, India's in the number 1 spot. And so, where they're coming from will change based on the, geopolitical and macro trends of the country, and where they choose to go study will also change based upon the policies of the countries. And so that diversification of saying we've got to support international students going anywhere. They could be going to the Nordics, they could be going to Europe, they could be going to New Zealand more. They're staying close, maybe they're staying closer to Asia in Singapore and Malaysia, given the uncertainty. And so we're really fortunate we have a diversified business in that aspect. And then the other parts that we've invested in around the other verticals, and even the fact that now we actually process just all the tuition payments for major universities. We're doing the domestic processing for schools like UConn or University of Virginia, Texas A&M, Stanford, all use Flywire, not just for international students, but for all their tuition processing. And so all those different diversification moves have helped us be able to navigate. And I think it's been a good test for us to say, are we a resilient business? And I think part of the reason we even chose to go public was having gotten through COVID and still had a growth business, even with all the crazy conditions that COVID put on our business.
I guess everything must feel like smooth sailing after COVID.
It was a rough period of time, yeah.
Let's talk about travel. What are you seeing in your travel business? Sure. Because that's also affected by policy and macro.
Yeah, so our travel business, for those that don't know, I mentioned north of $100 million business, really has 4 different areas. So it's got one aspect of luxury travel, and think of that, I'll give you a couple examples of luxury travel. So things like an African safari that your family may choose to go on, or maybe you're going on an ocean experience of some sort, small boat cruise, luxury yacht rental, all those kind of areas. Those have all been really poorly digitized. And then there's a whole set of kind of short-term accommodations. This could be vacation clubs, this can be corporate apartments, this could be student housing, for-profit student housing that happens in pretty much most countries around the world. And so think of it as luxury experiential travel experiences. Typically it's $5,000 plus travel experiences. So these are typically kind of higher market, not kind of walking tours or small ticket. And then the business that we bought in Q1 is the kind of the fourth part, and that's a hospitality business. And so that's with hotels. And think of that as boutique hotels, even some of the big brand name hotels. And what we're doing there is very similar to the rest of our business, which is there are specific flows for payments that are not e-commerce. They're not small dollar e-commerce. They're large, complex payments. So think of that as maybe booking a wedding at a hotel here in Boston, right? There's multiple payments. There's this whole document signing process, a configuration of that experience, and then there's multiple payments that are all tied to that experience. That process was a whole manual back office function for every hotel in the world, pretty much. And the business we bought was digitizing that experience and was not really monetizing the payments. And so Flywire comes in, loves that workflow of digitization of payments, and then brings our payment network with us. And so those are the areas of our travel business. And so we're fortunate because, again, we've got this geographic distribution of our clients. Our clients are all over the world, offering these amazing luxury travel experiences. They cover actually 7 continents, even Antarctica. We got clients down in Antarctica doing South Pole expeditions. And so when you think of that, it's a very geographically diversified business. The other part that's important is it's traditionally higher end luxury experiences. So these are not trips that you kind of usually will make just because you're looking for a place to go for a long weekend. These are things you may have planned for a year ahead of time, and those once in a lifetime experiences that you're saving for with your family. And so I think that's part of the reason our business has been so resilient in travel, even though the world is such a unique place right now.
So the next CEO that brags to me that they're geographically diversified, I'm going to say, but are you in Antarctica?
Yeah. Well, and most people will say their international expansion was to go to Ireland, right? And they're global, right? And so we really have clients in 50 plus countries, 40 plus nationalities, 35 languages spoken inside Flywire. So it's always been a very global business.
Wow. Let's talk about healthcare, because that also has been affected by policy lately and the One Big Beautiful bill. Can you talk about what you're seeing from a macro perspective in healthcare?
Yeah, so our healthcare business, we actually got into that business partially through our education business. So it's a great example, like as you think about a business and growth opportunities for your business, some things can just come up organically as you're meeting clients. So I was with one of our head of sales down at the University of Miami in Florida, and we literally finished the meeting talking to the university finance team. And as we're leaving, they said, "Hey, you should talk to our hospital. They have all types of payment issues over there. I bet they could use some help." And that was the first time we actually started to understand, nearly a decade ago, the challenges in healthcare payments. And so where Flywire sits in healthcare is we're not in the claims processing, we're not in insurance coverage, we're in actually the post-pay side of it, right? So think of it as after your insurance has been applied, there's an out-of-pocket spend component that you have to manage. And again, the reason why healthcare is kind of complex is that you're usually not expecting that type of payment, right? And so the average consumer actually can't handle an unexpected $800 bill that they get in a given month. And so most of the time, the traditional accounts receivable billing providers, they would just give you an invoice and say, pay it. And what Flywire did is we actually saw that problem with our clients, and we developed a whole suite of capabilities to say, hey, we understand here's an $800 balance that you owe after your insurance has been provided. And we understand you may not be able to pay $800 right now. How about you pay it in whatever way you want? It could be in 8 equal installments of $100. It could be in 3 payments. The hospital can configure different rules inside the Flywire software to provide that flexibility to the patient. And so it's a good example of like the reason they were actually having a hard time collecting those funds is because they didn't really offer great options to pay. And when people are surprised with that unexpected charge, right, they may not be able to pay that or pay that in a one lump sum. And so we started developing this capability for hospitals, and it's really been quite successful. And so now it's deployed at 4 of the top 10 hospital systems in the U.S. And it continues to be a challenging time as just you're in affordability crisis when it comes to healthcare. And so that's really part of why our software is so useful is as that insurance coverage part changes, it really helps the patient and the hospital find some way to close that financial gap in a way that's supportive of whatever the situation is of the payer, which I think is really important.
So speaking of ability to pay, this wouldn't be a fintech panel if we didn't talk about stablecoins.
Sure.
You recently announced a stablecoin partnership. Can you talk about how that fits into Flywire?
Yeah, so Flywire has the software that we had mentioned before. So we're helping, again, our clients, we're sitting between their system of record, helping them get paid. And so think of us as driving those software interactions with the payer. And then we're also bringing our own payment infrastructure to actually move and collect the money, right, in 40 plus countries. And so that's how the product works. And so when something like stablecoin comes up, and we had a similar view of crypto for the last decade, right, which is as it becomes more mainstream, our ability to add it as a node to our payment network is just kind of core to what we do, right? As we add credit cards, third-party payment methods, things like Pix in Brazil, whatever the most common ways to pay are, Flywire wants to have those payment methods available. And so what stablecoins has done, I think, is solved one of the challenges associated to some of the first iteration of crypto, which volatility, right? When we were starting out and we kept getting asked the question of, are you going to accept Bitcoin? The question was the volatility, right? Are you really going to kind of store your kids' tuition dollars in a relatively volatile cryptocurrency, right? Could have been good, could be bad, depends on your timing, I guess. But that was one of the things that I think didn't make it a huge mechanism for adoption, right? Is people were saying, hey, I'm not going to go ahead and hold this currency. It was also relatively complex to buy or purchase, and I think that's improved over time. I think as you now look at stablecoin, we've added it with this partnership with BVNK, and the thing that we've done is we're actually using it as a node to our network. So in the next couple of quarters, you're going to see Flywire, especially in high volatile currency markets, allow the payment via stablecoin in certain markets. And again, it's within our network, it's within our control. We'll look at whether the user wants that method, demands that method. And so we see it as a critical part to the node of our, as a node to our network. And I think you'll see a lot of companies around the world look for ways in which, especially if you're delivering funds to markets that are volatile from a currency perspective, do you provide different options of receipt to avoid some of that volatility? As we were talking about, in the waiting area, I think one of the challenges will be how do governments react to this, right? Because there's all different government policies that exist. There's a lot of currency-controlled markets in the world. And those governments, if you allow the conversion into a stablecoin, and then stablecoin or crypto is the outward distribution of those dollars, my guess is you're going to see a lot of countries start locking down rules and regulations around these to avoid kind of currency flight out of their countries. And so I think you're going to see a lot of change in this space, and we're trying to be on the front lines of adopting the technology as it comes available.
Where do you expect the demand to come from, and how quickly do you think it's going to ramp? And
yeah, I think in markets, in volatile markets where holding the local currency, for instance, if you're a contractor, your income is coming from overseas, or you're the recipient of maybe remittance dollars, any of those instances in which that receiving currency is volatile or unstable, I think that's going to be like the core use case almost immediately. I think it may already start to be one right now, which is how do you get your money out of that volatile currency into something more stable? And I think something like USDC provides some of that stability. And so for us, I think the question will be how quickly that's adopted en masse by customers in areas like Africa or Latin America in particular, maybe parts of Southeast Asia. And then I think on the big markets, it will come down to, what do the governments do around conversion into a crypto or a stable coin, and do they apply the same export controls on the currency that they do for nationals from those countries to export that stable coin or that crypto?
so for the payment side of your business, the economics of stablecoin payments are very different than fiat currency. Can you talk about how that affects Flywire?
Yeah, so it does, although I would tell you at scale, the economics change greatly, right? If you think of actually where the cost of conversion of currency is in cross-border money movement, it actually isn't in the conversion of the currency as much as you would think it is. It's in a lot of the operational and compliance issues. And so, you have all these government regulations where the money's going to, where the money's coming from. Different countries have different regulations. Different industries, payments for different purposes from different countries have different regulations and document capture requirements. And so that's where all the complexity exists, right? Where all this regulation is set up to help ensure good, clean money moves from country to country, and that certain countries have control on currency flight out of their country. And so that's where I don't think there's enough progress yet in either crypto or stablecoin around identity. And I think that's going to be the next part of that evolution, right? I'll give you an example from our perspective. We can go and partner with an exchange. We could go and partner with somebody like a Coinbase or a Kraken or somebody who actually is the controller of a wallet. But to just accept money from any wallet anywhere adds a whole nother layer of risk that oftentimes is hard to comply with when you don't have true identity solved consistently across countries and across demographics. And so I think that is by far one of the biggest areas that will remove the most cost out of it. And I think there will be innovation. It's just as complex because you're dealing with lots of current, like for Flywire, you don't solve it by just having a standard set up in the United States, right? We have payments coming in from all countries all over the world.
Is identity a problem we might see Flywire try to solve?
I think it's a big industry problem. I think you expect us to be on the cutting edge of adopting the technologies that can best help it. But I do worry you're going to see different technologies succeed at different countries. And some of them are national, right? Like if you look at countries like China and India, they actually have national databases that actually have publicly exposed APIs you can connect into to verify identity and to actually register certain types of transactions. And that's what you're required to do by law. And so I think you're going to see some that are more government oriented. You're going to see some that are more private sector oriented. And then you're going to find some players who have created almost like a Coinbase, who's a very reputable set of criteria. So you know that the users that have been through that identity process are more vetted than maybe a different wallet provider. So I think you're going to find private solutions. You're going to find some providers that cross different geographies, and then you're going to find national identity solutions. And there's this whole world coin and iris scanning technology. Like maybe something like that can take off at a global level, but I think it's going to be a very dynamic time over the next decade for it.
You're very proud of the culture you've created at Flywire. You talk about your Flymates, for example. Can you talk about how you've created that culture and what's special about Flymates?
Yeah, it is. It's a pretty special group of people. And I would say as we built the company over 13, 14 years, it was probably the number one thing as we kind of grew the company. Everybody would say, well, you have this amazing culture. And for the first couple of years, like we were just trying to survive, and we almost didn't even know what they were talking about. And we're like, what do you mean? Like we just are trying to like build a company. And it became clear that like we had kind of this core group of individuals. And as we went through this next part of the journey to scale, it became a bit of a panic of like, okay, we've got these kind of core 40, 50 people, and we're having some success finally. What do we do if we have to hire another 100 people, right? Like, how are we going to keep this culture, whatever these people are talking about, how are we going to define it and keep it and set up for scale? So as you kind of fast forward and think 1,300, almost 1,400 Flymates now, it has been impressive. We've been able to keep it. It's taken a lot of work. And it evolves. Culture always evolves. Like, there's certain things that do have to change as you grow and become bigger. But I think what you choose to keep and maintain is really important. I'll give you an example. I still do every new hire welcome course. We now have to group them so that it's not, Mike sending personal notes to every single person, which I did up until about 800 people, and then I couldn't handle the capacity anymore. To now, we have a 1 hour session, almost 60 minutes, I guess, 75 minutes, maybe hour and a half, hour and 15. And so I'm with all the new hires, and I get to tell the story of Flywire. I get to answer any question, and that's happening typically in the first 4 to 6 weeks of them joining. And so we've had to create a new process because of the scale and the speed. I have to do that twice, 2 different time zones, one for Asia and West Coast US, and one for Europe and US. But we've had to adapt things like that. I can no longer physically or digitally sign every offer letter, but I still press the button, right? Because I want to see the talent we're bringing into the company. I want to make sure I understand where they're coming in, their background, their skill sets. And so we keep looking for areas, to kind of maintain the key elements of culture. Things like, being more focused on executing for customers than getting too caught up in kind of internal talk and strategy, collaborating, like good Flymates collaborate really well globally. If you don't want to work at a global company, to your point, we're probably the wrong company for you. And so just trying to be really clear on the values, trying to hold ourselves accountable to those values, and being transparent, authentic. I think those are kind of core things that we've always tried to do. It gets harder, but you can do it. It just takes a lot of effort.
One last question.
Sure.
What would you tell your younger 30-something CEO self that you know today and you didn't know then?
That is a tricky one. Just one thing. I would probably say my first-time CEO, young 30 self, didn't probably realize how important how you organize people, and as the company grows, how critical clarity and communication matters. I think in general, when you're dealing with kind of good humans and good people, you've got lots of people who are very good intentioned. And you want to kind of be kind. You kind of occasionally hedge what you're saying. And as a company grows, it becomes harder to understand what is really being said. And so, especially if you have multiple layers and multiple people trying to hedge the message. And so that's been one of the things. So for me, like my mantra this year is left nothing unsaid, right? And just trying to be finding myself even realizing where I'm saying things that almost sound maybe not as clear as they could be. And I think that good managers try and deliver, either news or decisions or whatever, in a compassionate way. And sometimes when that is done, it can be blurry when you're trying to run fast. And so I would say that's probably the thing I would say, is just be really clear and make sure that managers are being really clear, because otherwise people start running down a path of doing something that doesn't fit with what you're trying to accomplish. And they don't even know they're off track. But you just haven't been as clear and haven't focused people as directly as you could.
Well, I'm quite certain we left a lot unsaid. I could ask you 100 more questions, but I think we got to keep this show on the road. Thank you so much, Mike.
Thanks for having me.